Well, hello, it's Simon Gray from Real Tail Trader here, and just with another video looking at the foreign currency markets this morning. Just before I get started, just important to say that this is not an advisory service. I'm not giving recommendations of things you should buy or sell. It's purely for information purposes, and one of the ways that I track my activity in the market. So I'm in a Trade Navigator platform. So yeah, with that said, don't take this as advice. Just take it as education, if you will. And maybe some, if you're new to the Forex market, maybe some inspiration as to how the thing is played. And if you're more experienced, then perhaps another perspective on some of the things that I'm seeing, perhaps that you're not, a different view on the market, perhaps. So yeah, don't take this as an advisory service, please. Okay, so I'm in a Trade Navigator platform. For some reason, my streaming service has stopped, so let me just start that now. I'm just going to show you 3 trades that I'm currently in. Been in those for a few days. I'll start with this one over here, which is Swiss franc Japanese yen. I'm shorting the Swiss franc Japanese yen, which effectively means I'm selling the Swiss franc and buying the Japanese yen. I got into the trade up here. Let me expand that. This is the 240 chart, so 4-hour chart, which means every candle is 4 hours in duration. So I got in on this signal here. It tagged my entry point here, and the reason I was playing this strategy, I have 2 principal strategies. This is my range strategy. You'll see on the daily chart here, I've got the 200 simple moving average up here, the 50 simple moving average here, and these are Bollinger Bands here. They were equally spaced, and basically I'd got 2 touches in price at these extremes, and that qualifies in terms of my rules, because I have a trading plan, as you must have in the foreign exchange markets, or any market, stock market, whatever it is. I had a signal then to sell. So what I did, I placed a sell limit up here. Let me zoom in a bit. Placed a sell limit that was tagged here. And as you'll see, price reversed at this point and is now in more of a downward trend. So what I mean by downward trend here, you'll see we have, yeah, that's a lower low. We have lower lows, lower highs. So I've got a lower high here, lower low here. Yep, lower low here, lower high here. That's what we would expect to see in a downward trending market. So although this is a range strategy on the daily chart, where each candle is worth a day's worth of activity, the intermediate trend is on the 4-hour, as I see it anyway, is a downward trend. So I've got my entry here, got my stop loss here. I've moved that stop loss in slightly. I opened a first position here at 111.90. I opened a second position here, 111.55. Reason I opened a second position is, and that was on this candle here that I've highlighted, the market made a lower low. I have just, it looks like, yes, there we go, I've just hit my target 1. So what that means now, having hit target 1, is I will bring my stop into break even on this particular trade. I'll have a margin of error here on the second position, but I'll bring my stop in here, which means I'm reducing the risk on my trade all of the time. When I get down to here, this is my second target, and when I get down here, this is my limit order to take off all of the position at the bottom of the range. And what I might do there, depending on price action, is reverse my position and go long, because you can't have a bias in the foreign exchange market. So yeah, playing 2 separate positions, 2 separate entries. So I'll move that stop and just log that winning trade here on position 1. And what I'm looking for, just so I explain that a bit more clearly, this was my initial stop position. This was my initial entry position. So if I chart a 2-for-1 risk reward, you'll see here that gives me a 1-to-1 risk reward on that first position. And what I do there is I take off half of that position. That encourages me to take profits. It means the cash register rings. Yeah, one of the problems I've had in the past as a trader, trading is all about personal psychology. One of the problems I've had in the past is that I've been reluctant to take profits, looking for that massive win. So I take incremental profits now, and it's really improved my game. So that's the first position I've got on. Let me move to the next one now, which is Euro Japanese yen. I've got this in a long trade. Okay, so this is on the daily chart. Each candle is worth a day's worth of activity, and I'm buying. Well, I bought here down at the bottom of the range. This is where did I get in? In fact, no, this is a trend trade. I beg your pardon. This is my second strategy. So I bought here on the candle when the 10 exponential moving average crossed above the 30 exponential moving average, which is the black dotted line, and crossed above the 50 simple moving average on the 240 chart. So I bought here. I've been in this trade for a little while now. As you can see, it's making higher highs, slightly higher lows. It's ran into some congestion here, unsurprisingly, at the 200 simple moving average on the 240 chart. If I jump out to the daily chart, you'll see yesterday on an XY signal. This is one of my proprietary signals. It means the signals that I have programmed into my computer. It's closed above the 50 simple moving average on the daily chart, which is a good sign. So I'm anticipating, I don't know, the market could do anything, and my job is to protect myself at all times, but I'm anticipating a move back up into the top of the range here. Again, this is a range trade, 2 tests here, 2 tests here in terms of my rules. So yeah, some congestion here. What I did on this trade, I entered on this candle at my 1-to-1 risk reward ratio. I moved my stop in to break even. I've got a slight profit margin in here now. I basically put my stop 20 points below structure, so below these lows here. So I've got a little bit of profit in there. I've already taken profit. I took off half of the position here, took off £6.25 up here based on the points that I got. So I've logged some profit, and now I'm anticipating a move up to here. If not, price will come down. It will take me out for another small profit, and this will be a winning trade. Not quite a 2-to-1 risk reward ratio, but still a winning trade. Okay, and let's look at the final trade that I'm currently in, where I want to talk to you about something I call evolving risk reward, and this is my Euro Swiss franc trade. So Euro Swiss franc trade. This is the daily chart. You'll see we've been in a downward trend here, and I bought around about here. I'll dive into the 240 chart here. Now, the reason I bought, again, my signal, my trend trade signal, was the orange dashed line, which is the 10 exponential moving average, crossed above the 50 simple moving average, crossed above, was above the 30 exponential moving average. That was a signal to buy. I bought once here. When this level held, I bought secondly again. And we've been in this higher high, lower high, higher high, higher low, higher high, and we're in this consolidation phase now. This was overnight, so that was 6 o'clock yesterday. That was the overnight candle. So overnight we've started to build more momentum to the upside. So I'm looking as a secondary target for price to reach up to here, probably test this 200 simple moving average on the 240 chart, but I don't know, anything could happen. The good sign here is that the distance between the 30 and the 10 exponential moving average and the 30 exponential moving average is widening. It shows there's momentum to the upside. The traders who are perhaps on shorter time frames here, 1 hour and below probably, who are shorting this market, so selling this market, their stops are probably around about this level, 1.126465. If price tests that and triggers their stops, of course, if they're selling short, their stops are to buy their position back. That could add to the buying momentum to take us up into this level. Already have profit in this trade. Stop has target 1 has been hit. Stop has moved to break even. So this is a risk-free trade now. And if price reverses, yeah, I'll still have a winning trade. If price goes back up here, then or up here, I should say, then I'll have more profit in this trade. So not a bad position to be in. And my job is always to try and ride this trade as long as possible, to ride the winners as long as possible, and to cut the losers short quickly as soon as you realise or recognise that this trade is unlikely to be profitable. Now, I just want to talk to you about something that I did yesterday, because I had this target at 1.1251. Sorry, I had target set at 1.1255. So let me just draw that in. 1.1255. Let me do that on this chart now. I'll keep that in black so you can see it. And we got to this level. We got to here, and price started to stall. There was a little bit of a reversal on this candle. And this was getting towards 6 o'clock, so later on in the day, London time, of course, still got the afternoon in New York. But the slowing momentum meant that there was a probability that my target would not have been hit. Now, what I'm always looking for on my trades, ideally, is a 2-to-1 risk-reward ratio. So if I draw that in there, you'll see that is exactly a 1-to-1 risk-reward ratio. But the thing is, as price advances towards your target, the risk-reward ratio of a 1-to-1 here, one distance here, one distance here, it starts to change. I call this evolving risk-reward. So once price got to this level, 1.1250, and interesting, this was a kind of mid-even handle, so 50 round number, I started to be concerned that maybe the price was going to reverse and come all the way back without hitting the target. So I decided to manual override and take my first position, or 50% of my first position off here, 50% of my overall position off here. And the reason I did that is because my risk at that level, at this level here, was, I'm potentially going to give back to the market all of this profit for only a tiny, so small I'm not going to be able to draw it, for a tiny increment in increased profit. So the risk reward ratio had inverted. Okay, that was the risk. I'd give back this profit. I was basically risking this amount to make an additional amount. It was getting towards the end of the day, so I manual override, which is in line with my rules, and took profit there. Now, it doesn't matter. Price has actually got past my initial target 1.1255, but that doesn't matter. Yesterday it hadn't. And with the spread on this pair, because it's a synthetic pair or cross pair, spread was quite high. I think 2.5, 2.6, something like that. It meant that even though it looks like price hit here, it actually didn't with the spread. So that was the decision I made. I call this evolving risk reward. So I'm going to record this, process this video. I'll come back and let you know how these trades pan out. As always, no idea what the market's going to do. This is a game of probability, not certainty, but time will tell. My job, as always, is to cut my losses short and to let my winners run. So we'll see where we end up. But until next time, hope you found this video useful. Take care, and I'll talk to you soon.